All right. ISM just dropped. Really important number. 48.2 versus 49 estimate. New orders below estimates. Employment below estimates. Prices paid above estimates. That's not good. I'm going to unpack what this means, why the ISM is so critical to calling the future of price action equities, bonds, commodities, currencies, real estate. It's involved in everything. The ISM, let me just start out by saying, if you like this content, if you want more of it, like, subscribe, comment, turn all notifications on, and please share this material, because it's always going to be free with somebody that you know and thinks likes and likes financial content that puts everything together. This is the Macro Ghost. I'm going to give you a show in under 10 minutes that is the best TA and FA on the planet in under a certain time period. I'm going to say in under 10 minutes today. And there's a lot to get to. I was going to put this with the Powell speak. Powell is speaking today. It's probably going to rally the markets because he's going to have to adjust and say, listen, macroeconomic activity is slowing down significantly, and the ISM proves it. The ISM manufacturing represents the Institute of Supply Management, ISM. Manufacturing represents 11% of the GDP economy in America. You might say that, well, that's not enough. That's not a lot, but it is a tremendous amount, and it is it is highly correlated to small and medium-sized manufacturing and business confidence. And small and medium-sized entities are what fuels the U.S. economy. Okay, so that's why we take this read seriously. And I wanted to explain that in a way that says, okay, I have the ISM number here. I can forecast out to say, okay, my expectations are now, unless the Fed does something drastic, I'm expecting more slow, stagnation in the economy. The Fed has to bail out the economy for the economy to start growing again. The ISM is showing me that the economy does not want to grow because it doesn't have the confidence. It doesn't have the support, doesn't have the low interest rates. Low interest rates make borrowing cheaper for these small and medium-sized entities. Look at this graph. I modeled this today. This is the ISM for the trailing 12 months. Contraction, 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 contraction. Slight expansion in the beginning of the year with that Trump pump, right? There's the expansionary number right there. And the rest of this represents contraction. We do see a small head and shoulders forming here with a higher low potentially being put in. But the key number here is 50. We got to get above that number if we want stocks to rip, right? If we want confidence to come back into crypto and Bitcoin, right? So given that, let's just look at Bitcoin really quickly here. Since my last show, my last podcast, whatever this is, 3 or 4 days ago, I said, be very, very careful. Bitcoin has, let me go over here. Where am I? There we go, right there. Bitcoin closed November bearish. Bitcoin opened December today bearish. Worst quarter on record since 2018. I mean, 2018 was a terrible bear market, guys. So I said, be careful. And if you're being careful with Bitcoin, be very careful with alts, because now we have a slope behind this data. We have a huge slope. Ad blockers. Okay. Oh, close the connection. RSI looks bad. Everything on Bitcoin looks terrible. So on any bounce, I'm going to increase my position in MicroStrategy short, also called MSTZ on the ETF. Okay. But let's get back to the PMI. Let's get back to what I wanted to say next, which is we'll go to commodities, because the manufacturing index affects the ISM affects building, it affects manufacturing, it affects real estate construction. Real estate is a huge portion of GDP. So if real estate gets hit, copper, steel, aluminum, they're supposed to get hit as well. But what I'm seeing, what excites me about commodities, the commodity, not the miner. I don't want the miner. I want the commodity. I want the aluminum futures. I want the copper futures. I'm going to get to all these great commodities. You see aluminum here, it's kind of at resistance and support. It's kind of breaking above, and it did have a pullback today based on the ISM, because if the ISM is weak, the demand for aluminum will be weaker because the builders are not going to build as much, et cetera, et cetera. Copper too. you see, this is an hour chart. I wanted to put it on the hourly chart for you guys to see that there's a big pullback in copper. But if you stretch this out, it's a clear breakout. And silver too, a clear breakout. So the ISM is contracting all these months, but commodities are not playing along with this game. Why? AI. There's your alpha and your omega, everybody. Commodities are a buy now because of AI. Aluminum, copper, nickel, silver. Silver is huge into AI, and I just learned that. Gold isn't, but silver is. And so I'm really excited to see this, and I say, okay, give me a why. Give me the fundamentals so I could tell my audience on YouTube why silver and aluminum and copper and rare earth are going to keep going up as long as AI bubble doesn't burst, right? If the AI bubble bursts, forget about it. Forget about it. But AI is the next generation of technology. So silver is fueling that next bull run demand of artificial intelligence, electronic vehicles, solar energy. Silver has a role in this. Silver is called gold, silver, platinum, and palladium are called precious metals. Why? Because they're thought to not really have an industrial use like copper, like steel, like aluminum. Silver has now an industrial use. Now, it's looking very toppy on the RSI, right? If you're buying this pump, you shouldn't be. You should wait for a pullback. This is really toppy. So I could see it pull back a little bit, maybe even retest 163. There's your buy, 165. Be smart about it. Don't just go out and rush and buy silver because I'm excited about it. I bought it in here in this triangle. And aluminum is probably a buy here before it breaks out. Copper isn't a buy. Copper's on a mad tear. So I'd be really super patient. And also the one thing I wanted to do is put myself out there as, I have portfolio management experience. I can help see a portfolio, see your time horizon, see your age, see your risk tolerance, and say, okay, let me show you what I want to do with your portfolio. But that's for another day and another age. But I just wanted to put it out there. And yeah, I think that's going to be it for now. I wanted to put this with Powell, but I don't want it to go over 10 minutes. The main takeaways are that PMI is contracting still, but a higher low is being put. It looks okay. 48.7, 48.8, 48.4, 48.8, 40. It could roll over too. So we need Powell to man the fuck up and say inflation is not our concern, it's deflation. ISM is showing deflation, everybody. What is deflation? Deflation is when prices come down, when prices pop, when equities come down. We don't like deflation, okay? That means the value of our holdings come down. So deflation is the risk, not inflation. And the Fed knows that, and in my opinion only, the Fed is acting against the executive branch. They're saying, "Fuck you guys, you put in tariffs, we're gonna hold rates." That's what we're going to do. And we're going to fight you tooth and nail on that until Trump gets the Fed, which is in June. And then I would say from June, there's going to be a lag. So probably September, October, November, and I talked about this on my last video, September, October, November next year, things could get hot. Things could get really good. So that's it. I'm going to leave it there. Again, if you made it through this video, congratulations. You are a true believer in finance and a true autist with what I want to teach. You have a true passion, so you should definitely like and subscribe to my content. Come to my Discord. I'll leave a link for that. And then I'm going to come back tomorrow night for part 2 of Powell. I want to give a 7 to 10 minute discussion on Powell. Thank you guys very much for enjoying and coming and watching my content. Thank you.